Hi guys, it's Chris, Calm Rat. Welcome back to another day, another trading session, another market analysis video. I got some good news and some bad news. The good news is if we take a longer view of things, actually besides the start of the bull run back in, let's say, 2020, when the volume was clearly still the highest. If we take a bit shorter look since then, we have actually come to a point at which we are now exactly where we are. We have more volume in this zone around 20,000 than we have anywhere else. 40,000, 38 to 40 was the strongest before we had a huge dump to the downside. And so, the good news is that when we build volume like this, it's a sign of accumulation. It's the case I've been making now for quite some time, and it's the case I'm going to continue to make. I don't see what else could be happening other than that. We're essentially building a new base. So 20,000, is where we topped in the previous in the previous bull market in the past. So it makes sense that this is kind of where we're coming back to reconcile. Those who bought anywhere in between, including myself, are quite wrecked and in pain, suffering with pretty heavy losses. Unless we were clever enough to be taking profits along the way, then of course now we're just back in accumulation mode, which is the right way to be thinking about it. So in the future, as you're in the green, make sure to be taking out cash. Don't just keep adding and adding and adding all the way up. Especially don't be adding margin buys the whole way up. Don't be bumping the leverage without taking significant profits waiting for a pullback. If you're only going long, then that's the only way to do this. You can't expect to not be in pain right now otherwise. But that is the good news. So the other, let's say, good news is that we're at a crossroads right now, with generally speaking, this green accumulation line is unfortunately, the point at which we generally, we get support, right? And so if we actually get above this, then we're highly likely to be maintaining these levels going forward. So even though we are still trending down, as long you see what happens often is we come down and get caught on some of these levels, and then we stick with them going down for a while. And so what could easily happen here is we could still stick to this bearish trend for a while, but it is a bullish side of the bearish momentum, right? I don't know if that is anything that makes you excited or not, but it does me. Another point here that I'd like to make is that there's a huge gap in volume right here, right? So we have a massive amount here, and that means when we do pass the 24,000 mark, it's highly likely that we will bounce quite rapidly up to 30,000. Okay. But we're not likely to just shoot through it. And if we do, we're likely to shoot through about to 33, 34, to the first fib levels, and then get rejected and come back down and start retesting these 23, 24 levels and fill in this volume, here. So we have a ways to go, but we do have, a gap in the trading volume here, in the liquidity, let's say, and this is where the magnet is going to get pulled up into this zone. Given that this is all being collected down here, we will be pulled into this space and start trading between 24 and 30 for some time. It's almost certain, in my mind. Now, I would also like to point out that the end of the year, kind of actually, if I was, I've been sitting here playing with these the distribution fans for a while, and it does appear that the pressure, the high pressure, whoever's playing these games, looking out longer, is playing a game of resistance here in this zone. They were playing support here to pull in some shorts to extend. This is the story I tell myself, that here they did use this as a place of building momentum, selling out their shorts, their first round of shorts, and then pushing it up and reaccumulating their shorts up in this area. And then, once they had enough, then they just let the water, let the prices fall quickly, right? They stopped resisting. And the way you can do this, if you think about it, is you can play the spot and the future markets against each other. You can be trading down, shorting the future markets while you're accumulating slowly the spot market, and flip it in reverse. And then, if you want here, once you've had enough futures up in this area, then you can just short the hell out of the spot market here. When you have your shorts here, you can sell spot, push it down, and then flip, right? And go, you can buy, then, swap it around. You can start buying your, covering your shorts and buying future longs and so forth. So, as we get to these lines, you can see, you can imagine this being, let's say, a large player, let's say, with, several $1 billion under their, for the capital which they can be trading with. And when we get down into these spots where you see it moves down and hits these spots so perfectly, right? Within just like 1% or 2%, right? And they switch. It switches here. This is always going to be, these zones really are the zones of importance. And right now you can see, actually, we've gone up. We're trading against this. We're hitting this distribution line here, and then that turned into, we hit this accumulation line here, and you can see that it follows it. It's like following this line. It hits this, then it follows this line, right? And so the bad news that I have right now is that we're right in the middle, which is generally very common. We're in the middle of this move, we're also in the middle of both moves, and what we're not in the middle of yet is this move, right? So the bad news is, well, we can easily still pull back down into this range, right? I'm just gonna say it, like, there's two options. One, in the next, basically, this is the Fed announcement day, approximately. I think it's the 15th or 14th, 15th, 16th. I don't remember right now. And this is also approximately when the Ethereum, and this is, mid-month is going to be a very, very exciting time. And so what can happen here is we can continue to be resisting on this line for those who want to accumulate, which is going to be pushing us down towards this point, right? Down to 12,000. That will be unbelievably painful, right? And it will be the first time in the history where we have actually, really retraced back down deep into previous bull bear run cycles, territories. Usually we've never made it under previous all-time highs and so forth, but the cycles are not predictable in any exact way, and they matter about market contexts. So it is looking like we could very easily still be writing this line down. Okay, this is today, but it's also possible that we could hit this middle, the 50% mark between this move, right? And again, if you look at fib ratios, the halfway point, or if you look at trades, the halfway point tends to be pretty important. I haven't done this. I'm just going to test my own theory here, right? But look, if you take this move, look, the yellow line is 50%, is the 50% mark, right? And this is not considering time. This is just considering vertical movement. The Gann Fann is the same concept as what I just showed you, but it considers time. And so if you take any move, and it's fractal, right? So any move here, this ratio here, or this move here between these two lines, take the halfway, and I'm eyeballing it, right? So we could be even right at it. No, it is like about there. We've passed the halfway mark here, but it feels pretty bearish today. And what could happen though is we turn and start following this one, just like we've done here, right? We start following it. We start hitting that as the resistance, as the distribution line. And so we could come down and then start hitting this, and so that would be, that would actually be the bullish thesis that I'm looking at, is that's what we're going to do. We're going to catch this move to the upside and start like flipping the momentum. But I'm shorting the market right now quite heavily. Just in the past 24 hours, I switched from long to short because again I saw the DXY divergence all morning. Europe was rising, Asia was rising, everything was like confusing because the dollar continued to actually rise, although basically all Asian currencies, Australian and the euro, are all falling. So it's possible, of course, that people are dumping those. Japanese yen right now is at all-time lows, I believe, or 20-year lows or something like that. It's very, very, very ugly for a lot of currencies. So they're all moving to the US dollar, and also the asset prices in general usually fall in reverse correlation with the dollar moves as of recent. So so it made sense to me that actually something was about to happen. So I started shorting on the way up, and I've made a little bit of profit today, which is good, because actually the previous days I had gotten it. Oh man, sorry for the beeps here. I had gotten it wrong, and I had to trade out. At some stop losses for about a 4% loss when I expected it to be going long earlier, and then it didn't. So anyways, I'm happy that I did make the trade today successfully so far. Anyways, and I'm still holding my long and waiting for the end of the day to see what happens. I would like to just say that So there's another interesting thought here, right? If we go further out, really further out, and we start looking like, okay, this is December, this is January, okay, this is the next year. Do I have? do I have that? Yes. Okay. So if we start looking at the next year, right, and we kind of project again, we can we reverse map this, or I'm reverse mapping this as the current model, which give or take is probably wrong, right? But it is teaching me something. So we know that this is resistance, right? When these tighter angles are when these angles here are tighter and the lines are closer, it tends to mean that there's going to be heavier resistance. And that's when in this case, I'm calling these the distribution. This is when the market makers and the big traders and the ones who are doing it right, who are playing the long game, are going to be exiting their positions. They're going to be exiting their longs and really, they're done accumulating their shorts. They're going to exit their longs, which will then push the market down, right? And they'll be accumulating longs on the way down and exiting their shorts all the way down. And then they flip it again. And so you see that this is the resistance. So, all the way out to January 2024, we can see that actually, we can project this, anyways, as if someone is playing this right now, where you can see the resistance does line up all the way out to that March crash back in the day before COVID, which is interesting, right? It aligns pretty damn well, and so what do I see here? Let's see. Let me get rid of not that. Let me get rid of these two. Yeah. So these line up pretty well. The current move aligns up pretty well with what we're looking at now, which to me, we did drop through it. So I'm analyzing this on the fly, but no matter how, either way I looked at that, the thing is that actually the next move here is quite large, right? I don't think we're going to get down to zero. This is all the way down close to zero. I think that's going to be tough. I think we can still do a 50% drop down to the 10-12 line, which means, potentially, what is all this garbage? 10 to 12 line, which of course is going to be around here, as I suggested. So, we could be playing this game where we would be on this line all the way into the end of the year, crash it, and then, start making our way back up this line, right? And then what's to be said here, though, is that the volatility, no matter how you look at it, even if we change this to this, no matter how you look at it, the volatility is going to be pretty intense. Okay, maybe it's more like this. And so, we don't have to go all the way down into, we could get into December rather before we start moving back up. It's of course going to be very much up and down. It's not going to be a straight line. So we know that. And 30,000, let's look. So when could we get to 30,000? 30,000, is going to be no sooner. The problem really is that there's this resistance line here, which means to me, like we're going to have trouble getting to 30,000 by the end of the year until we can clear this space in December, January, and then start making it into the next zone here, right? So I'm pretty pessimistic, I guess, if I look at this right now, that we'll be at 30,000 before the end of the year. But I will continue to look at it, and my argument will continue to get tighter, and I will update you with the next ideas. Clearly, these are not final. They're not solid ideas, and I would love your feedback as to how you're judging. And next time we can look at the logarithmic regression and see how that's looking.